Hi everyone, I'm Heinz and welcome back to another video from SIC Forex. I hope that you are having a fantastic start to the year, and today we'll be featuring the Royal Prince MT5 scalper. This scalping bot looks ideal for small trading accounts and new traders. And remember, if you enjoy any part of this video, to drop it a like and subscribe for more. I have already downloaded the bot to my MT5 terminal. However, first I want to show you how to download the Royal Prince scalper for your own personal usage. The bot is available through Richard's Telegram bot that makes it available for free download. He also has an MT4 bot available on the MQL marketplace, so make sure to support Royal Prince Trading as the bot is available for free for us to use. Once you have accessed the link on your Telegram, simply press the correct EA that you want to download. For today, we'll be featuring the Royal Prince MT5 scalper. So press to download and it will download directly to your Telegram download folder. You will see the Royal Prince scalper also comes with an MT5 strategy tester guide. I have found the guide filled with useful information, especially for those of you that are new to robot testing and optimization. In the document, you will find different relatable sources, including the difference between a source file and a code, as well as an executable file, and how to install the Expert Advisor. To install the Expert Advisor is very simple. Simply copy it to your data folder for that specific terminal. Once you have installed the Expert Advisor, you are able to perform a multitude of different strategy tests. If you are unfamiliar with some of these components of strategy testing, I recommend taking the time and going through the document, as there is quite a lot of fantastic information, including the optimization for backtesting criteria. So let's take a look at what is the recommended time frame and symbol. You'll see the recommended symbol is the EURUSD and the H1 time frame. I will be testing my own custom period and a zero latency setting. So to test the bot on MT5, simply press test and select the bot that you'll be testing. The symbol will be the recommended EURUSD, and I'm going to do it on the 1 hour time frame from the custom period of the 1st of January last year, or 2022, until the 10th of December 2022, as recommended, with a zero latency and an every tick model. And because this is for a small account, we will be testing it on a $100 deposit. I have everything set to default so that we can take a look at how the breakout strategy works. The breakout strategy that this bot featured is very interesting, so we'll take a closer look in the visual mode and see how it works. So everything has been returned to default. Select the visual mode to get an accurate interpretation of what the bot would look like in the market. Remember, on the hourly time frame, each candle represents an hour, so there will be quite a long waiting period between trades. I see that the bot is using a pending order in the form of a sell stop, and on default it has a 200-point stop loss and a 200-point take profit. What this means is the bot identifies a potential support and resistance or supply and demand zone where there could be a breakout. Here it has now identified a buy stop above the current price if price continues in a bullish dimension. Currently, price is trending down, so let's fast forward a bit and take a look at what is the result of the first trade in the visual mode. As you can see, the bot is good for a small account because it uses a set stop loss and take profit. It doesn't use any grid functions. However, it's important to consider that this is a semi-automated system. What I mean by that is you will need to pause it for news events And on its default, I feel that the trailing stop of 10 points on a standard account will cause only small profits. You'll see here that we were exposed for $2 to the market. However, we only were able to get a return of 0.05 or 5 cents. By doing this, you are limiting your drawdown, however, also your return probability if you don't have a zero or raw spread account. So what we can see the bot does is a breakout strategies from the highs and the lows. So what we're going to do next is run it for the complete period from the 10th of January until the 10th of December. The reason for doing this is it's in my typical trading wheel. So let's take a look at the graph at the default settings. So you will see the bot does take a couple of losses, which is to be expected. And on a 0.01 lot, it gives us an equity of 149.12 cents. What this means is a total profit of $49.12 over this testing period. You'll see that the drawdown, because of the very tight stop loss and trigger, is $3.89 or 2.69%, with a very impressive profit factor of 4.43. We look at the percentage 1 out of the 180 trades placed by the bot. It was able to win 172 trades with only 8 losing trades. When we look at our highest profit and our highest loss, you will see even though it's been set to 20 pips and 20 pips because of slippage, spread and commissions, I would recommend increasing your take profit above your stop loss to be able to achieve the 1-to-1 risk to reward. Again, out of the total of 180 deals, a 95.56% win rate is really impressive. When we look at the spread of the days, the reason why I recommend that the bot be traded as a semi-automated system is because if you were to skip certain days, you could potentially increase its profitability and miss those losing trades. What I'd recommend is start with the default settings and test them for yourself. However, I would recommend adjusting the trailing stop depending on your own broker. So what I'm going to do next is to show you how to run a series of optimizations to find the best trailing stop for your specific broker. For the sake of time, it is important to select 2 variables to 3 variables that go together. Otherwise, your total steps will be quite large and it will take a very long time to run. I do recommend going through the user guide and taking a look at the different optimization options that are available and use them according to your own specifications. This account that I'm using is a demo standard account. What means is it will have a relative spread reflective of a real account, and on a 10-point trading point trigger by 10 points on this account, I do not feel in the real world that it will be as profitable. What I recommend for each broker that you trade on is to adjust your trailing stops and take profit and stop loss according to that specific broker and trading environment. To do this, select the optimization option that you want and parameters or variables for that test. In this example, I would have tested 10 by 10 or 100 different strategy tests. After doing the strategy test, I found for this FBS account the best trigger point to be 60 points or 6 pips and to trail by 10 points or 1 pip. What this means is after 6 pips, the expert advisor secures 5 pips already and then trails by 1. The next thing that I'd like to discuss is our lots and risk percentage. When it comes to risk percentage, I would like to make a recommendation for my beginner traders. If you are new to expert advisors or trading the bot for the first time, change your risk percent to 0 and change your manual lots to 0.01. If risk percentage is 0, it will use fixed lots and it will only trade 0.01 lots. I recommend doing this for the first couple of months as you get familiar with the bot. Before we run our next visual test, remember to disable optimization. So let's take a look at the graph with our updated trailing stop and trailing stop trigger, where the trailing stop is the amount that it trails by, and the trailing stop trigger is when it starts to trail, when the trade is in profit. You already see a much healthier balance and equity curve because of this trailing stop adjustment. Again, if you are a new trader or just beginning with Forex trading robots, I recommend adjusting your risk percentage to 0, which makes it fixed, and adjusting your lots to 0.01. However, if you have been trading for a while and understand that you are only risking $100 in this account, we can potentially use large lots because the stop loss and take profit are set. That means even if there is an unexpected event in the market, the most you could be losing is 200 points or 20 pips. By increasing your risk percentage, the bot is auto-calculating its lots, and because of that, it's able to turn $100 potentially into over $400. If we look at specific periods in time, after the first 2 months, we were already up $130. You'll see there are periods of stagnation where the bot uses slower equity growth. However, because of the amount of consecutive wins that the bot is able to generate, you'll see that it is able to generate a very healthy return with a very low drawdown. Our total equity ended at $418, meaning our $100 to $418.05 in less than 12 months. Our drawdown is at $39.92 or 15% on a $100 account. And out of the 180 trades, we have now given up some winners by only winning 152. However, you'll see the amount relative in net profit is much higher. Another reason why I recommend trading this as a semi-automated bot is because of the distribution of losses and wins by weekdays. You'll see our maximum consecutive wins is 32 wins and the average wins in a row is 6. If we look to trading days, you'll see major trading days with news announcements have a large red bar. And if we look at this set file, there are months, including July, where the bot wasn't profitable, and a break-even month in March. For the other 10 months, they were all profitable. Now, I often get asked to make the set files available, so they will be available on the Google Drive so that you can test them on your own broker. I recommend altering your trigger points and the points how much it trails by for your own specific broker. If you do have a low spread or zero spread account, you can use the 1 or 10 points because of your enhanced trading conditions. However, I do recommend for most standard accounts to adjust it according to your own specific broker. Next, what I'd like to do is look at a 5-year backtest for the set file that we have just made. Testing a bot for 5 years means that it would be able to trade through the coronavirus, wars, and other things that have happened in the last 5 years. It is important to understand that it is a semi-automated system, so there will be times where you will need to manually alter or enter or stop the bot. My recommendation is to look for red folder news on Forex Factory and avoid those trading days. So our strategies test is starting on the 10th of January in 2018, and you will see there are periods when the bot makes great returns when you should be making withdrawals, and there are periods where it does lose and have consecutive losses. However, over this long testing period, our $100 balance is up to $1,400. The reason for this is not only the risk percentage, but because we have optimized the bot for our specific broker. It is important to understand that the set files need to be adjusted for your own broker. However, if you have the time and spend it on trading and specializing your bots, you will see good returns. Even over this maximum period of 5 years, drawdown peaked at 16.21% with the set stop loss and take profit. If we look at the distribution by months again, you'll see that July, which is a spring break in Europe, and the US, which is the two main houses for this currency pair, you'll see that it has a major loss. And again, why I don't recommend trading in December is you'll often see a lot of the bots making losses in December. Even with all that into consideration, over the 5 years, 9 of the 12 months were profitable and 3 weren't. It is important to understand this because if you were to start in July, you will need to trade an entire month with the bot before starting to see a potential return. When it comes to the scalping trades and scalping bots, it is important to use a virtual private server. The reason for this is the low latency that these scalping bots require to get high returns. I recommend taking a look at the different accounts offered by your broker and look for a low spread account. I want to say thank you to everyone for watching, and as always, happy trading. Until next time, bye.